I had a client recently call broader-based investing peanut butter approach. I'm gonna go with it. So if you see opportunity in the market right now, should you use the peanut butter approach or should you cherry pick? The answer depends. Let's take a look. First things first, this is for illustrative purposes only. It is not advice. If you want to discuss your individual situation, call your wealth advisor. So I'm bringing up a chart showing the VIX, basically a measure of volatility over the last 2 years. You can see that volatility is raised, but it's not excessively high. This is as of October 20th. If you look at the 20-year history of the VIX, you can see extreme events in 2020 and in 2008, 2009. There may not be extreme opportunity, but there's definitely opportunity. With any investment, remember that you need to proceed with caution, especially during a bear market or a recessionary environment, which we may be going into, and you also need a good dose of patience. The peanut butter approach, and by this I mean buying a broad-based portfolio of companies, stocks. This works best for people who don't have existing investments in, say, their corporate account or maybe personal assets, or perhaps they're putting in a large cash deposit of, say, $500,000. What you want to do is probably invest in stages. Generally, you wouldn't do it all at once, but you can still take the peanut butter approach or buying a slice of the portfolio, nicely diversified completely across the board, and then you do it again and again, depending on what's going on in the market and your personal situation. Cherry picking or adding to individual positions. This works best for people who are just starting out, who are wanting to build a portfolio, but they can do it in lump sums. And for whatever reason, maybe they don't want to buy mutual funds, they have a desire to have individual stocks, so they're going to buy companies at a time as they add to their portfolio, and they do it in stages. They can only do this if they're comfortable putting up with the added risk that this adds until you have a broader based portfolio. Or this scenario can work very well for people who have an existing pre-built, well-diversified portfolio and you're just wanting to sprinkle little bits in, maybe 50,000 or 20K into your portfolio, and you're adding to specific companies. And remember, if you have companies that are being recommended in a broad-based diversified portfolio with the peanut butter approach or cherry picking, all of those should be good quality companies. That's why they're being recommended in the first place. The best thing you can do if you have questions is to call your wealth advisor. We're always here to help. I'm Anna Hilberry. Thank you so much for listening.